What is up, guys? Logan here again, and today I want to do a book review on the Tony Robbins book called Unshakeable. And this book is kind of the book that inspired me the most when it comes to investing, because it taught me to not be fearful and that the market has generally always swung up and it always swings up harder coming out of a bear market. So I kind of felt like this video fits the, economic situation we're dealing with right now. And this book really talks about how the media tries to tell you that the market's gonna crash. It almost seems like every week that it's just the worst time, and you'll get messages from friends like it's all gonna be red, horrible, and everything starts to go up and you're just like, who should I listen to? When you really should just listen to yourself. And right before I hop in depth, I just started a Patreon channel, so you can subscribe for $2 a month to where you just support the channel, support my Patreon, just kind of like a thank you for me putting up these videos. I'll give you the link to the Discord and everything like that, all the fancy stuff. And then if you want to do the $5 a month subscription, you and I can hop on a 15-minute phone call and we can talk about options. We can also talk about investing, dividend investing, your portfolio moves. Let's jump into this first part that I like to talk about the most, and it's investing. You always want to be thinking long term. The stock market isn't looking at today. The market always looks to tomorrow. What matters most isn't where the economy is right now, but where it's headed. And when everything seems terrible, the pendulum eventually swings in the other direction. Every single bear market in US history has been followed by a bull market without exception. So we're in a time like that right now. In February, we were at the all-time high the stock market's ever been, and then it proceeded to fall roughly 30% from its highs, which put us in a bear market. And from that time until even about a couple weeks ago, a lot of stocks were retesting where they were in February. A lot of the big tech sector stocks, all of those that just seemed to explode back after the big pullback of the whole market. And during that entire time, I panicked only one day, but I didn't sell anything. I just panicked because I was like, I don't have the cash to buy more now. And I'm in a much better financial position right now than I was back at that time, but still being able to take advantage of cheap stocks right now, like Realty Income and other stocks like that, where I'm still able to pick them up in a super reasonable price compared to where they were in February. Although stocks like Apple and Facebook are back to where they were, stocks like Amazon just seem to keep exploding. And right here, market turmoil isn't something to fear. It's actually the greatest opportunity for you to leapfrog to financial freedom. You cannot win by sitting on the bench. You have to be in the game. To put another way, fear isn't rewarded, courage is. Because you know what the worst thing is? The worst thing is when you sit and wait for the stock market to bottom and it never actually hits the bottom until you realize that it's too late. That is the absolute worst thing that can happen, is not buying stocks when you could have bought on the way down and the way up, and you're looking at your position in the same position as it was during this whole market. You did not capitalize like the way you should. You waited, you started buying at one of the worst times, which is when everything is getting back up to its highs. You started to get comfortable again. And that is what you don't want to do. You want to buy as close to the bottom as possible by dollar cost averaging every day. I seriously feel bad for a lot of my friends who will give me texts throughout the day and say, you know what, Logan, I know you said to buy today, but I'm not gonna, because tomorrow's gonna be worse. They keep saying that for 2 weeks, and we never get to the position they think we're gonna get at. Well, the whole time, I've been purchasing shares of companies that I believe in for the next 10 to 20 years. And just the best investors know that it's the money you keep after tax that matters. Because if you're day trading and Uncle Sam's like, give me that 40% dog, and I'm like, nah dude, I'm gonna invest long term, I'm gonna give you that 15% though. So that saves you literally 25% of your investment. And if that's compounding every single year, I mean, that just totally beats day trading. And I swing trade and options trade all the time, and I love that. That is not just my sole purpose of investing. I am a long-term equity holder of dividend stock companies. That's just my opinion. I love options trading, but it's not my long-term approach to investing. Seriously though, you never want to be in the position where you have to sell your stock at the lowest stock price during a bear market. Like, that would just be so horrible. Imagine if I sold out of my whole portfolio when I was down $3,500. At that time, I could have got emotional and said, you know what, I'm done with investing, I need my cash. And right now, all my stocks have recovered, and I would be sitting there, wow, I really cashed out. because you only lose money if you sell. So don't sell at a loss. Hold on to that company throughout a bear market. And we know that the single biggest threat to your financial well-being is your own brain. The human brain is designed to literally make dumb decisions when it comes to investing. You can do everything right, but if you fail to master your own psychology may ultimately become the victim of a costly form of financial self-sabotage. And you know, like, the problem with our brains is we're wired to avoid pain and seek pleasure, so we yearn whatever feels like to be immediate reward. And needless to say, this isn't always the best recipe for smart decision making. I'll take you guys to the compound interest calculator. So let's say right now I have about $17,000 in the stock market. So let's take my initial investment of $17,000. I plan to contribute, I'll be modest, I want to contribute, you know, $500 a month. And you know, how long, for how many years? Let's say just 20 years at an interest rate, let's see, the market's generally 8 to 10% a year. So let's do 10%, you know, compound. In 20 years, my 17 grand with me just putting 6 grand in a year on top of that will be $500,000. And if that doesn't impress you yet, check this out. Let's say you work and you want to retire at 60 and you're 20 right now. Let's say you had the same initial investment as me. You put in $500 a month, but the length of time is 40 years. So we'll go there at a 10% return. The results are, in 40 years, you will have $3.4 million. That is insane. Compound interest to the max. Starting investing while you're young is literally gonna put you ahead of so many people. And if you're not comfortable with picking individual companies, I don't blame you. Pick index funds. Index funds are the easiest way to invest with a passive long-term approach. Even right here, you know, it eliminates almost all trading activities and it reduces the fees you need to pay. If we do a rough recap of what I've gone over today, it's the best time to invest is during a bear market because you get prices discounted. The best places to invest are index funds because it takes little effort to sustain it. It's super passive. You'll pay less in taxes investing in the long term. The power of compound interest, I think that's a huge place for building long-term wealth, is seeing how money can compound. Let me go with number 4 is real wealth isn't just money. Real wealth is health, your emotional state, your physical state, your spiritual state. That is gonna be the biggest thing that I took away from this book, was like, you can make as much money and still be the most miserable person in the world. But I still think it's important that we pay attention to our finances so that we can live comfortable lives and not have to worry about stress or, you know, other people's opinions, because we choose to live life on our own terms. And by investing in good companies and good funds, especially index funds, the easiest way to do it, you can be set up to retire, but also just to have money compounding and growing with you as you continue to grow. You could also potentially retire early. So it's all about keeping that growth mindset. Every day you wake up to make yourself better. So I want to thank you guys for getting this far in the video. I absolutely love what I do every single day. This means the world to me that you sat and watched this long. Don't forget to check out the Patreon link, check out the Discord. I'm just so pumped that you guys are along for the journey with me. And oh yeah, don't forget to hit the like button. But I will see you guys soon. Thank you.